Good morning, good morning, good morning. God, that's a bit of AC/DC in the background, a bit of thunderstruck. Can't be that to get the juices going. Right, where's Mr. Brown? There he is. One sec. Let's get him on. Da-na-na-na-na. All right, Chris. Dun, 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 na, 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 thunder. Na, 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 na. Hello.
Good morning, Ryan. Good morning, everyone.
Morning. Let me just get the legals out of the way. As usual, nothing discussed on this spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trading as PIQ or PIQ Suite, or its hosts, which is obviously Mr. Michael Brown and myself, Mr. Ryan Paisley. And I've been up for about 4 hours and I am gangster tripping on all my coffee.
Oh God.
Oh,
Well,
God.
I'm running on Lemsip this morning rather than coffee.
Oh,
So
God. Oh,
yeah,
no.
that
Oh,
bout of man flu has hit Royal Tunbridge Wells, it seems.
oh, no, nightmare. Well, to be
So
honest, I'm not in Tunbridge Wells, so I'm kind of not I don't care that much. Let's be honest.
thank God for that.
Hey, also, just in case anyone is listening from Forex Live, obviously I'm on the decks. I'm on the ones and twos for Forex Live, covering their European sessions for the next few trading sessions. So I did take the liberty of posting about the ramble on there. So if anyone's listening for the first time from there, welcome. Sit down, strap in, strap on. Michael Brown's gonna give you a roundup of yesterday. I'm gonna give you some headlines via our good friends at News Corp, with a geopolitical bent. Stop it. And then Michael's gonna give you a preview for what to expect for the rest of the day. So over to you, my friend.
Indeed. Thank you, mate. Well, I was actually going to suggest to you whether you wanted to start things off this morning, because obviously all
Not
eyes
really.
are still. Well, fair enough. In that case, I'll crack on,
Well, no, I tell you
because
what. No, I tell you what.
all eyes are
Yeah,
still on the situation in the
yeah.
Middle East, of course.
That's not a bad idea. As always, people that have been listening for since we going, what, we must be going for a month or so now. But when a situation such as this, which is very much live, I try and stay out the way, because if you try and get too deep into the weeds, then by the time you've said it, it's changed anyway. So let's just give you a quick
Absolutely.
rundown of some of the stories via, like I said, our good friends at News Corp. So overnight, obviously, unless you've been sitting under a rock, you would be aware that the Iran launched a barrage of missiles towards Israel. Well, not towards, but also many of them hit Israel. The IRGC announced that they launched missiles toward Israel and warned that Israel will be targeted once again if it retaliates. Regarding injuries that were sustained, the Israeli Red Cross has said there was no reported injuries. The Jordanian government have said that there were 3 minor injuries, but that's because many of these missiles were shot down as they flew over Jordan on their way to Israel. Some were shot down by Jordan, apparently. Some were definitely shot down by the US and the UK. And we've heard as well that some obviously Israelis shot down some of them whilst they were still in the air over Jordan as well. But obviously, this is very confusing time. So, apologies if some of this turns out not to be the case. I can only report on what's being said right now, right here, right now. So, in terms of confusion on that note, even the Iranians aren't entirely sure what's happened, because the FARS agency, obviously, remember, all 8 news agencies in Iran are state backed, so you would like to think that they're on the same hymn sheet. They are definitely not, because FARS said 80% of the rockets hit their targets, while the Revolutionary Guard said that 90% of their missiles hit their targets. Iran's president said on Twitter, X, that Iran does not seek war but will face any threat firmly. A bit rich to say you're not looking for war after sending over 200 missiles to another country, but who am I to kind of tell you what to do? In terms of retaliation, obviously that is the name of the game right now. It's kind of all eyes on. One sec, there's a headline coming through now. No, it's fine. Sorry. So it's all about all eyes on Israel now to see how they retaliate. That is basically the crux of the story right at this precise moment. On that, Netanyahu has said that Iran made a big mistake tonight. Obviously, he said that last night, and they will pay for it, while he added that Iranian missile attack on Israel failed. Israeli officials have also been cited by Axios, saying that Israel will launch a strong response within days to the major Iranian attack, which could target, and the Israelis could target oil production facilities inside Iran. There's obviously many ways they could do this. Tanker Trackers put out a really good little analysis about what was most likely to be the target in Iran. Whilst Michael's talking, I was trying to stick up in the jumbotron because I can't do two things at once. I can barely do one thing at once.
Oh,
Um,
got there before me.
yeah, right. I knew it was coming. Um, Obviously, one of the other things to look at is will the US, will they, won't they, be dragged into this? From the commentary we had overnight, and again, I'm trying to pick this up in between kind of sound bites and whatever. Um, Obviously, they don't want to kind of say anything that kind of commits them too much, but they have said that if their troops become targets, then one sec, News Corp happen to be on the wires right now. Yeah, if the US troops get dragged into this, then they will take action. So on that, there have been explosions reported near the Ain al Assad base in Anbar, Iraq, according to Sky News Arabia, citing sources. Um, the Iraqi resistance group said that US bases in Iraq will be targets if US joins in the response to Iran or uses Iraqi airspace. Now, yes, you can say that, okay, these are Iraqi resistance, but the US have already made it clear that they are aware that these are Iranian proxies. So
Yeah.
you could infer that if these happen more frequently, or God forbid something hits one of these US bases and US troops are turning to casualties, then we could see the US upping the game slightly. Just a couple of, well, one headline that crossed just as we were going to Pixels, to quote New Squawk.
Ugh.
On their score, yeah, tell me about it. The Israeli military says that infantry and armored units are joining in on Lebanon ground operations. The Israeli military said on Wednesday that regular infantry and armored units were joining ground operations in southern Lebanon, but they said they would remain limited and localized in scope. They also stated on Tuesday that commando and paratroop units had crossed a short distance over the border, and this is the first publicly announced ground operation in Lebanon. So, yeah, it's all kicking off. One to keep your eyes on. Again, it's incredibly fast moving situations, so don't expect me to kind of marry any opinions or any comments that are being said here because it's just a fool's errand. But yeah, that's the lowdown from News Corp pretty much.
Well, very, very good summary as always, mate. And I think actually
Oh, thank you,
well,
mate, thank you. Oh, you
it,
can come again.
oh, thank you, mate. And I think what you were saying around the degree of uncertainty and fluidity around the situation, as we see
Oh,
with
good
any
word.
sort of geopolitical events, just speaks to the way markets have traded really over the last
Yeah,
18 hours or so. News of this being potentially on the cards broke around about the time of the cash open yesterday, so 2:30 yesterday afternoon, London time. And really, since then, we've just seen a classic kind of risk-off haven defensive playbook in effect across the board.
yeah,
Although we did see a bit of a pairing of some of this risk aversion late in the day yesterday, after news came out that the missile attack was over. I think markets breathed a little bit of a sigh of relief. But of course, participants will remain, hypersensitive to incoming geopolitical news flow over not just the session ahead, but really the coming days to see whether we're now in a sort of stage where it's going to be tit for tat retaliation, whether there's going to
yeah.
be escalation, and of course whether anyone else gets dragged into proceedings. So just to kind of just go through those price moves very
Sorry,
quickly.
just on this retaliation comment, which obviously we were both very much in the same camp that that is the game now. Just so people can make a note of it, I have put up this really good tanker trackers piece. The reason why I like it is because it's a level-headed analysis of what is probably, well, most likely potentially the Israeli target in Iran on the oil infrastructure. Don't think for a second it means they're going to start like blocking the Strait of Hormuz or stuff. Is that's in nobody's interest, especially like Iran as well. So definitely, please give that a read because it's rare that we get level-headed analysis on social media. So sorry,
It
mate.
is
Carry on.
indeed. No, I will. I will read that, but once I've finished on the phone with you.
Oh, sorry.
So,
Yeah, sorry. I was talking to the listeners rather than you. Sorry, mate. Sorry. Yeah, read
um,
that, you
so,
fucker.
so in terms of the moves yesterday, the S&P down about 1%, the Nasdaq down about 1.5%. As I said, both well off the lows. The Nasdaq was down by over 2% intraday at one stage, and those sort of classic, typical risk-off moves seen elsewhere as well. Treasuries rallying across the curve. The 10-year yield down about 8 basis points to 3.7%. The dollar gaining ground against all G10s. The dollar index rallying about 0.5% for the second day in a row. trading up to a high around 101.40, although again, we have paired a little bit of those gains in early trade this morning. The higher beta, more risk-sensitive parts of the G10FX market leading the declines. The Kiwi down about 1%, the pound down about 0.7%, with cable briefly trading back under 132.5. And in the commodity space, as you would expect, gold rallying about 1% on the day, and WTI crude settling 2.5% higher, although we were about 5% higher intraday, trading to a high of $72 a barrel, and both WTI and Brent on firmer footing once again this morning, with both up just shy of 3% as I speak, and front Brent trading north of $75 a barrel. Just briefly, besides the geopolitical shenanigans that we had going on yesterday, there was actually quite a busy economic calendar and also quite a fair bit of news flow to get through. So I'll recap that very briefly. In the Eurozone, we have the flash inflation figures, headline CPI rising by 1.8% on an annual basis in September, bang in line with expectations, and also the slowest annual rate of inflation since April of 2021. Core CPI rose by 2.7%, which is just a tick lower than the 2.8% that we saw in August. That pretty much nails on an October ECB cut. The market pricing that at around about a 95% probability at the moment. Of course, couple the faster than expected disinflation with a continued, really diabolical economic data with those PMIs that we had out towards the start of last week. And really the stars are aligning for the ECB to deliver a back-to-back cut in, a little over 3 weeks' time.
On that, if I may,
Go on.
well, I am going to.
You have.
Yeah, well, this is it, right? So obviously, as me and you and our dear friend Ryan spoke on the Flow Show yesterday, obviously from Forex Analytics and Forex Flow Live. So we spoke about the ECB, and obviously it's pretty much nailed on now that, well, we believe it's nailed on that they're going to cut 25. Now, I mentioned that, I raised the point that if you ignored everything else and just looked at the way the situations is regarding the economy and stuff, and regarded kind of ignored pricing for a second, and you said one of these central banks cut 50, you would say it probably had been the ECB. Now, and we also know that Germany would love them to cut 50 basis points. Not that it's very unlikely. But I put you a question.
Oh,
Do you
God.
think it's more likely, this is completely theoretical, do you think it's more likely that the ECB cut 50 basis points or cut none?
Oh, Jesus. What, in October?
Yeah, 17th. What?
Um, I
Oh,
mean,
stop
out
that.
of those, out of
Right,
those
yeah,
two,
yeah,
out of
yeah.
those two,
Go on.
cut
Cut 50,
50
right?
would be the greater
Yeah.
probability.
Yeah, no, that's I agree. I thought it's an interesting thought experiment, man. Anyway, moving on. Well, I'm glad we're on the same page at least. Makes
We are on
it's
the
probably
same page.
worrying for you, I guess.
Yeah, very. I'm going to go and reassess all my calls now.
Yeah, right.
Before I do that, though, we also had some data out of the US yesterday. Job openings rising north of 8 million in August, well above the top end of the Bloomberg forecast range and a 3-month high in the JOLTS survey. Slightly ironic that all of the August labour market data that we've had since the Fed delivered that 50 basis point cut has actually been quite solid, but never mind. That's done and dusted at this moment in time. Of course, there is very little read across from the JOLTS data to the non-farm payrolls print that is due on Friday lunchtime. We also had the ISM manufacturing survey from the States yesterday. That index remained unchanged at 47.2 in September, but we did see the prices paid metric fall to 48.3, which is its lowest level this year. For those looking ahead to the jobs number on Friday, the employment index was at 43.9, which is a fair chunk lower than the 46 that we saw in August. In terms of headlines, just a few very briefly away from the geopolitical developments once again. France have kicked the can down the road in classic EU fashion, they now don't expect to meet the 3% deficit target until 2029. They previously thought
Oh,
they were going
you
to do
saw that
that in,
coming.
well, exactly.
Fucking hell.
They previously thought they were going to manage that in 2027, which is now clearly not going to be the case. In the aviation space, Boeing, they're looking at a potential rights issue, $10 billion worth of stock to be sold, but they are only going to do so after they resolve their strikes that are still going on. But of course, Boeing's woes continuing. And speaking of strikes,
No
this
pun?
might be my
Sorry, no pun. You don't want to get a pun in there?
no,
No
no,
pun.
no, no, no,
You sure? Fuck
speaking of
me, you are
strikes,
real.
this might be my last morning blast because I'm going to go and become a longshoreman in the United States.
Oh, mate.
The union
Mate,
there is
join the
asking
back of the queue, mate.
for
Back of the
a
queue.
61.5% pay rise. And of course, this relates to the ongoing port strikes that are taking place at the moment. Very, very punchy rhetoric indeed from the dock workers' unions. And we will see how that one gets resolved. Obviously, getting even less airtime than it was before, given the shenanigans in the Middle East, but still something worth keeping
Yeah,
a very
that's a good
close eye
point.
on.
One thing, obviously, unfortunately, I went down the longshoreman rabbit hole. I don't recommend going down any longshoreman holes.
Oh
Oh God,
God.
Ryan. Oh God. But obviously, one of the crux of this as well is they're massively against automation, which is a bit of an issue when ports are increasingly becoming automated. And there's been a few people. I did put out a list yesterday of the people that you should definitely follow. Which again, I'll stick it in jumbotron in a second, but. Um, it turns out that the ports that can get away without, relying on these, these longshoremen that apparently are massively needed and nothing works without them. Those ports are far more efficient, and everyone's happy at those ones. So I've got a feeling that the union leader, especially who is, I think his total compensation package is like £1 million, $1 million a year, into including like benefits and stuff. So he seems to be. I know I read a few things this morning where basically a few of the interviews he did overnight, it's not gone down well with the general public in America. And increasingly so, even people in his own industry are turning against him. So I get the feeling, like we've seen in the past with like train union leaders, he might have bitten off a little bit more than he can chew, and this could backfire spectacularly. But it's definitely one to watch.
Indeed, yes, we shall see what happens there. But that is pretty much it from me this morning, unless you've got anything else to run through, Ryan. We can.
Well, news that broke just as we were talking is that there's a Wall Street Journal piece saying that Saudi minister warns of $50 oil as OPEC Plus members flout production curbs. Basically, this comes, remember we always say that it's all about the compliance of cuts or compliance of production rather than the actual headline numbers. And the Saudi oil minister is basically saying that nobody in OPEC Plus is sticking to the agreed upon production limits, and they're pumping regardless. So there's a lot of oil in the market. This is like something we've always known. It's just nice to see them saying it out loud. But yeah, that's about it, my friend. So
Cool.
I think
All right
that's.
then. Well, in terms of the day ahead, it is a relatively quiet economic calendar. Although, of course, I think geopolitical events are going to be the
Yep.
dominant theme for most market participants to be keeping a very close eye on over the next day or so. In terms of scheduled events, we have the latest eurozone unemployment figures due this morning. Unemployment expected to have held steady at 6.4% in August, and then at 1:15 this afternoon, we get the ADP employment figure out of the United States. The ADP employment metric set to have risen by 123,000 in the month of September compared to the 99,000 that we saw previously. Of course, this bears basically no resemblance to the official payrolls data that we get on Friday, so take it with a huge pinch of salt. We do have a fair few central bank speakers on the wires today. We hear from the Fed's Barkin, Bowman, Musalem, and Hammack throughout the day
Oh
today.
boy.
I believe. For those who are nerdy enough to focus on this sort of thing, Hammack, I believe that is going to be her first remarks since taking over as a 2024 voter, so maybe worth a bit of a look. And we also have 6 ECB speakers on the docket as well, including Chief
Oh joy.
Economist Well, including Chief Economist Philip Lane and Isabel Schnabel, who's one of the more influential voices on the executive board. So we will see whether either of those, or both of those perhaps, lean into the idea of an October rate cut. But I think, as we saw yesterday, it's going to be events in the Middle East that really shape things over the session ahead.
Fun fact for everyone listening: a friend of mine and Michael's, a guy called Will, his son looks a spitting image of ECB's Lane. There you go. It's a bit
For some reason, I thought you were going to say Schnabel.
of no, definitely not. No, definitely not. But I did paint a fence the other day with some creosote, and I did end up looking like Lagarde, but that's another story. Hey! Right, on that note, we've got to wait for the awkward silence after we finish this so we don't cut each other off. Oh, Drew's turned up late. Lovely jubbly. Right, guys, as always, thank you for listening. Anyone that's kind of heard about us for the first time because I've taken over Forex Live's account for the morning, great to meet you.
Stick
I would
around.
say
Come
that
back tomorrow.
yeah, I would say that, it's not always like this, but it always is. So anyway, Michael, I will see you later on. Well, I'll speak to you in a bit. Guys, as always, thank you very much. If you are trading today, as always, keep it tight. And now you've got to wait for the awkward silence so we don't cut the end off the show.
Indeed. Cheers, guys.
See you, mate. See you, mate.